Hello everybody, this is Lara with your end of the week update for US oil for the trading week ending Friday, 23rd of April 2021. I'd expected a bit of upward movement. My target was 64.7. Price moved a little bit higher to 64.38. That's pretty good, just 0.32 short of the target, and it's turned down from there. It looks like that bounce for a B wave is over, and now I'll be expecting a 5-wave structure down for wave C. The target zone is now 54.86 to 53.67. If price gets there and either keeps falling or the structure of the correction is incomplete, then the next target will be 46.76, and I'll expect one of those two targets to be met in another possibly 2 to 4 weeks. This bigger pullback still is not over. Elliott Wave analysis first, classic analysis last for oil this week as usual. This Elliott Wave count sees a supercycle degree first wave over here, a big double zigzag for a supercycle degree second wave over here, and now a supercycle degree third wave beginning, which must move beyond the end of the first wave that back at this high here, and it has to move far enough above that point to allow a huge fourth wave to then unfold and remain above first wave price territory. So I don't have a target for this big third wave, but suffice to say it would be extremely high. I don't have a target because I can't be confident of exactly where the first wave began, so I can't use the length of the first wave because I can't be confident of what it is. And so, approaching target calculation for this huge third wave, when cycle waves 1, 2, 3 and 4 within it are known, then I will know where cycle 5 begins. I'll have the lengths of 1 and 3. I'll apply Fibonacci ratios between 1, 3 and 5 to calculate a target for cycle 5 to end, but that won't be able to be done for some years. Within supercycle 3, no second wave correction may move beyond its start below 10.24. I've had a few bearish questions about US oil. Well, it's technically possible it could continue lower as a triple zigzag, but where would the third zigzag move into? Futures reached negative price territory back over here. This is cash market data. It reached down to 10.24. A triple zigzag would have to deepen the correction. There's just so little room for that to move into. It just wouldn't have the right look. It's technically possible, but at this stage the probability is quite low. And now we have a new swing high above this point. The probability is even lower, so I have strong confidence, and I will have further confidence in this wave count if we get a new high above this price point back here as well. Let's take a look now at the weekly chart. I have 2 weekly charts for this movement here. The first from this low here, this point back here. I've got 2 ways of labeling this. Both of my weekly charts will see a 5-wave structure complete here, a 3-wave structure complete here, another 5, and now another 3 unfolding. This could be cycle 1 and 2, and cycle 3 could be extending. The target is for it to reach 2.618, the length of cycle 1, considering how high I would expect super cycle 3 to go. If cycle 3 is extending, then this may just be primary 1 within cycle 3. Primary 2 may not move beyond the start of primary 1 below 33.65. My target for cycle 3 here is 121.43. Let's take a look at this at the daily chart level, where the high for primary 1 here, which is the last swing high for oil, is this point here. Primary 2 now looks like it may be unfolding as a zigzag, and that is the most common Elliott wave structure by a very wide margin, and especially also for a second wave, and so that was expected to be the most likely structure. A zigzag subdivides 5, 3, 5. If I've analysed this correctly as a 5-wave structure, that tells us 2 things. The pullback shouldn't be over there because a correction doesn't subdivide as a 5-wave structure. Well, with the exception of a triangle, but they're different and they don't subdivide as the sole corrective structure in a second wave position. This is an impulse, and corrections don't subdivide as 5-wave motive structures. So the first thing it tells us is the correction's probably not over there, and the second thing it tells us is the following bounce for the B wave may not move beyond the start of the A wave above 67.97. The only circumstances in which I'm going to get bullish on oil for the short to mid-term is if this daily chart is invalidated with a new high above this price point. And one of the nice things about Elliott Wave is those rules, all but one rule in Elliott Wave, are absolute. And so an invalidation means a new high by any amount at any time frame. A fraction of a cent on a tick chart is enough to fully invalidate this chart. But it looks like intermediate wave B may be over here as a zigzag, A, running triangle for B, nice looking 5-wave impulse for C, could be over here. And now we've got a bearish candlestick reversal pattern, a bit of strength in downward movement with some reasonable volume for these downward sessions. It looks like intermediate B could be over here, but I'm going to have to allow for the possibility, and we have to be open and flexible, particularly with B waves. They really are the worst. It is possible it could continue higher as a double zigzag. I could move the degree of labeling here down 1 degree. This could be minor wave W. The first zigzag in a double, we could have X, and then minor wave Y, and so the invalidation point remains back up here at 67.97. If next week we see more upward movement for oil, then that's how I would relabel intermediate B, continuing higher as a double zigzag. If intermediate wave B is over here, then we can now apply the Fibonacci ratio between intermediate A and intermediate C to calculate a target for this pullback for primary 2 to end. Intermediate C would reach equality in length with intermediate A at 53.67. That's a little bit below the 0.382 Fibonacci ratio of primary wave 1, which is at 54.86. So now we have a target zone for primary 2 to end. Primary 2 may not move beyond the start of primary 1, below 33.65. I would expect intermediate C to last between 2 and 4 weeks in total. At the weekly chart, this is my other wave count, I've moved the degree of labeling here down 1. Instead of cycle 1 and 2, this could be just primary 1 and 2. Cycle wave 1 may be incomplete, with primary 1, 2, 3 and now 4 continuing lower as a zigzag. Primary 3 on this chart, because it's on a semi-log scale, looks like it's shorter than primary 1. It's actually slightly, just a little bit longer, and so this would meet that core Elliott wave rule. There's no limit to primary 5 because primary 3 can't be the shortest between primary waves 1, 3 and 5 because it's already longer than 1. Primary 4 may not move into primary wave 1 price territory. The invalidation point for this wave count's a bit different at 43.77. When cycle 1 is over for this wave count, it would then expect a big, deep, multi-month to maybe even 1 to a few years bear market for cycle wave 2 to begin and unfold, which may not move beyond the start of cycle wave 1 below 10.24. This second alternate wave count at the weekly chart level now diverges from my first main weekly wave count, and it'll probably continue to diverge for months yet, so we'll keep having to consider both possibilities. Classic analysis now. The weekly chart level. This is all a little bit squished up, but this week was essentially an upward week, but it's closed red and there's more pressure for, or more volume for downward days than upward. A little bit of an increase in volume this week for the downward movement within the week for the short term is bearish, although overall volume is declining as prices pretty much essentially moving sideways. ADX again this week slightly increases, again indicating an upward trend, which is again extreme because the ADX line is above both DX lines. ATR is showing a little bit of increase as price rised, and now it's turning and basically flattening off as price is moving sideways. On balance, volume is interesting at the weekly chart level this week. It's at support. This support line is pretty much horizontal. It's got 3 prior tests, so there's a little bit of technical significance here. This may assist to halt a fall in price. That's another reason I'm considering that it's possible that that bounce could go a little bit higher. But if next week we see on balance volume break below the support line, that would be a bearish signal. It hasn't happened yet though, and so in the first instance, let's look out for the possibility this could offer support and halt a fall in price. RSI is back in neutral territory after reaching overbought for the prior upward trend, and stochastics also in neutral territory. At the daily chart level, the short-term volume profile is bearish, more pressure on downward movement from volume in downward days, then for upward days. And these two upward days also have a pretty small range. Price is essentially consolidating now with resistance just a little bit above 63.5. I'll put it at 63.5. I'm looking left to the chart, way off to the left to draw these horizontal trend lines. So resistance about 63.5 and support about 57. We really need to see a breakout of this consolidation zone before we can have any confidence of the next direction for oil. The Elliott Wave count says quite strongly the breakout's more likely to be downward than upward. ADX with a prior upward trend reached very extreme. It was above both DX lines and above 45, and now it's been declining for a while, telling us that there's no clear trend. ATR's declining as price moves sideways and now higher. That's absolutely normal for a consolidation. On balance volume at the daily chart level, I've had to redraw the resistance and support lines because it was breaching and then moving back within them, and so I've redrawn them again. Now we've got more anchor points for better technical significance. This resistance line here is long held and it's got multiple tests. This is highly significant. This may assist to halt a rise in price. The support line is not as long held and it has some slope. It doesn't have the same strength of technical significance at the daily chart level. Let's watch this carefully next week. A breakout by on balance volume could indicate to us the breakout direction for price. Sometimes when on balance volume develops a nice zone like this with strong resistance and support, it breaks out just before price. When that happens, it's a great signal. RSI is in neutral territory. There's plenty of room for this pullback to continue lower. Stochastics also neutral and MACD bullish. This week with your oil analysis, I'm using a new microphone this week, so I hope you find an improvement in sound quality, and I hope that all of our members are having a fabulous weekend.